All right, so hi guys, I'm looking at the S&P 500 ETF, the SPY, and it is the 18th of March. As you can see, there is a very strong resistance level over here at about 281.15 thereabouts. And you can see that in the last couple of days, we kind of broke out of that resistance level. So remember that when the price of a stock or ETF breaks a resistance, that creates bullish momentum. So I'm right now bullish on the S&P, and I'm seeing it going up to potentially 290 over 295, right? So I could buy a straight call, or I could buy a call spread. So I'm deciding to buy a call spread. So what I'm going to do is I'm going to click on trade over here. And the first thing is to select a date to expiration. Now, again, when I buy a call spread, I don't have to sell 30 days before expiration. I can hold it close to expiration or even let it expire in the money. So I'm looking at buying the 18 April expiry. So I've got 31 days to expiration, 31 days for the SPY to reach my target price. Okay. So which strike do I use? Okay, so again, I prefer to buy the slightly in the money or at the money strike. So I'm looking at the delta. All right, delta over there. So I'm gonna buy the 281 strike. Okay, that has a delta of 0.54, 55 deltas. Now you could buy the 51 as well, nothing wrong with that. Okay, but I'm gonna buy the 54. Now one reason is because I already bought a couple last week, so I'm just adding on, right? So I already bought it and I'm gonna add more in, so I'm gonna buy this 281 strike. Okay, so I'm gonna right click and I'm gonna buy a vertical spread, right, which means buy a call, sell another call. So click on that. Okay, there we go. So buy one, sell one. So the long call is going to be 281. Okay, now where do I want to put my short call? Normally I place it at where my target price will be for 30 days. So I could put a target price of 291. All right. Sorry, wrong. So this should be 281. Yeah, so if it turns red, something's wrong. This should be 281, and this is 291. Okay, there you go. Now, some of you would ask, okay, why can't I buy the 281 and sell the 295? Well, you could do that as well. But remember that the higher your short call, the less premium that you collect to offset the cost of the long call. But then again, the higher you place the short call, the more potential profit you have. So there's always a risk to return trade-off, right? So usually what I do is I'll analyze the trade and I'll look at which one gives me the best risk to return ratio. If I got a risk to return ratio of 1:2 or 1:1.5 or more, then they'll be pretty good. So let's take a look that for this trade right now. If I were to analyze the trade, always analyze the trade before buying it. All right, so this is the risk to return profile of the trade. So the first thing is to make sure that the expiry date, 18th of April, is set over here. So that's 18th of April, that's correct. If not, change it to the 18th of April. Okay, then what we do is in this box, we put in the date that we intend to exit. So of course we could always exit near to expiration, but let's imagine we exit 10 days before expiration, which is the 8th of April. It happens to be my birthday, so good luck, right? So 8th of April, there we go, 8th of April. So this purple line that you see, the purple line, will be the risk, will be the profit and loss on the 8th of April. So whatever I set in this box would be shown on the purple line. The green line, once again, is the profit and loss at expiration on the 18th of April. Right, so let's take a look. If I enter this trade today and If it fails, if it goes back down, I'm obviously going to cut loss. So I could approximately say, okay, if it drops back down to 278, for example, then maybe I could cut my loss, right? But I'm targeting that it's going to go to 291. So you've got to always have a place you're going to cut loss, a place you're going to reach, and see what your risk to return looks like. So if it drops to 278, so I'm going to move my cursor to 278, right? How much do I lose? So take a look at the box on the left, the purple number, okay? So at 278, I'm losing 281, right? $281. That's my loss if I exit, if it drops to 278 on the 8th of April or earlier. If I exit earlier, you'll be even less of a loss, okay? Now it goes to 291. It goes to 291. How much do I make? Again, take a look at the box on the left. I make 427. Okay, so in this case, I'm risking 287 to make 427. That's my risk to return ratio for this trade. So what's my risk to return? If I take 427 divided by 287, it's about 1:5. Sorry, 1:1.5, right? So I'm risking $1 to make $1.50, thereabouts, right? So again, like I said, as long as 1 to 1.5 or higher, it's a pretty reasonable trade to take. So if I'm happy to take this trade, I'll just go to trade and confirm and send in the order, and I can see it's going to cost me $4.14 right now to buy this trade. So I click on that, and again I'm going to confirm. Okay, my max loss 414, my max profit 586. Okay, but again, I'll not allow it to lose 414 by holding it to expiration. I would probably lose 250 or 260 because I'm going to cut loss the moment it goes down, way before expiration, right? So if I'm happy, I can click send and the trade will be in. All right, now if I actually already bought this a couple of minutes ago using Interactive Brokers, I'll show you that account in a short while. But once it's in, you can actually monitor the trade. You can see I've already bought a couple of call spreads over the last few days. As the S&P has been going up, I've been buying call spreads. You can see, for example, this call spread I have right now. This was a call spread I bought a few days ago. It was the 276 call, right? So at the time, the SPY was at 276. So I bought the 276 call, which was at the money at the time, and my profit target was 285. So currently, it's almost at my profit target. So that's why you can see over here, that's my profit. This is the profit and loss, right? So you can see that on the long call, I've made $379, right? So remember, as it goes up, your long call makes money, your short call loses money, right? So the net would be 377 minus 130. So that's about $240 net profit on that particular trade. All right, so I'm going to entering the new order right now because it's broken out of the consolidation pattern, and I see it reaching 291. So I'm entering this new trade. All right, so you can place your order with Think or Swim, but in this case, I placed it with Interactive Brokers because again, I've got several accounts. So sometimes depending on which account I like to place a trade in, I'll just place the trade on that account. So for this particular trade, I put it on my Interactive Brokers account. So you can see that it's over here. That's right. So again, it's the 18th of March, and just when the market opened at 9:30, you can see I bought the 281 call and I sold the 291 call. So I bought the 281 call at 442 and I sold the 291 at 50 cents. So my net debit would be again 442 minus 50 cents. It'll be 392. So that's the net debit or cost of my trade. 392 times 100, $392. All right. So you can see that this is the portfolio, and I already bought actually one spread on Friday, last Friday. So I bought another spread. So I've got two spreads for that particular strike. So let's see where it is. Yeah, that's the one. All right. So that's the 281 call. You can see I've got two contracts, and the current profit, this is the profit and loss, is $79. Now it's $81, right? So that's on the long call, profit of $81. And for the short call, it's over here, which is the 291 short call. That's the short call, and that's minus $20, right? So plus 90, well, now it's 90, right? So you can see it changes all the time, right? So sorry, not this one. Yeah, this one, right? So now it's $105. That's right, right? So $105 on the long call, and on the short call, it's $22. So 100 minus 22, so that's about $78 net profit for these two contracts right now, right? So if it goes up, I'll make a total net profit of about $580 thereabouts times 2, so it's about $1,200, right? As you can see, I've got several other call spreads I've opened previously. Yep, this is the one. This was the 275 call which I opened. This has a P&L of $115. Okay, there's a 275 call, and pairing with that call, that's a 285 short call, right? So the trouble with interactive brokers is they don't come like combine it together. Like think of swim is like, okay, the long and short is together, but it's like all apart here, but it's fine, right? So, but let me just show you how I entered the trade when the market opened. So basically, under the order entry, you could just put SPY and go to options. And then you get this option chain over here. So you can see it looks a bit different from Think or Swim, but more or less the same. And over here, you can select your date to expiration. So we're going to click on more. So it's the 18th of April, right? Yeah, so that's the one, 18th of April. So select that one, and you get the option chain, okay? So the strike price was 281, okay? That's the one, 281. These are the calls, these are the puts, okay? So if I want to buy the 281, I just go to that, right? So you can right click and go to option trader. And you can actually create a strategy, right? So click on that. So if you're buying one call, you can just buy it, or buying one put, you can buy it. But if you're buying a combination of calls and puts with a strategy like a spread, then use the strategy builder. So when you click on the option, you will add into the strategy. Let me just show you very quickly, right? So again, let's make sure it's the correct date to expiration, 18th of April. That's the one, okay, 18th of April. So we're buying the 281 call, right? So click on, for buy, click on ask. For sell, click on bid, right? So click on ask, boom, it appears there. Buy 281 call, right? Can you see that? All right. And then going to sell the 291 call. So go to 291. There, 291, right? Sell this one. So click on bid for sell. Boom, there it's there. So you can see it combines it together as a strategy and shows you basically the risk to return graph. Just like Think or Swim, similar, right? And you can see the current cost of the spread is 429, right? And then you can click transmit, and you go in there and you'll be filled if it fills for that price. So that's exactly how I place the order. And so once I place the order, you can see that I got a confirmation over here on the time. and it was sold and bought, and it appears on my P&L over there, right? So that's how I place a trade on Thinkorswim as well as Interactive Brokers. And you can see again why I placed the trade, simply because we have got a very clear consolidation and a breakout from consolidation. So it's a great time to go long. So buying a call and selling another call, that's a call spread. Okay, so I think it's time to take profit on my SPY call spreads. Right now the SPY is at 289.96, so about 290. And the date is the 12th of April. So I'm going to take profit on, let me see, which one is that? Yeah, this is the one. Okay, so I'm going to take profit on my SPY calls. Okay, so this is my SPY spread. So earlier I bought the 281 call and sold the 291 call. So that's a spread. And it's got 6 days left to expiration. So good time to take profit just before it expires. What was my trade price? So I bought the 281 call at 448 and I sold the 291 call at 52 cents. So what was my net cost of this trade? Let me just do a quick calculation again. So 448 minus 52 cents, 396. So times 100, $396. That was my cost of the trade and the initial risk. Okay, so market price as of today, the call which I bought at 448 is now worth $9. Okay, so that's more than double the price. The call I sold, 52 cents, is now 88 cents. So if I were to close the trade right now, what would I get? I'll get 912 minus 86 cents. That's 826. Times 100, that's $826. So what's my net profit? Roughly it'll be 826 minus 396. So my net profit, you can see over here, which is the P&L open, would be, yeah, this is the net profit, which is 463 minus 35, so about $430, right? So roughly about $430. That's my net profit. Okay, so I made 430 out of 396. Well, not fantastic, but that's 100% return on investment in about 30 days. Just I think slightly more than 30 days. So in options, that's pretty normal, doubling your money in about 30 days. But of course, if it didn't go my way, I could have lost this capital as well, or lost half of it, because I normally cut loss at 50% of my premium, right? So I'm going to close the trade because doubled my money in 30 days and 6 days left to expiration. So I could take profit on this, right? Okay, so to take profit, I'm going to click on this, create the closing order. Oops, sorry, not that one, this one. Okay, sorry. I need to link these two things together first, because if I sell it right now, I'll be selling it separately. I like to sell it together. So I'm going to create a new group. I'm going to group the orders together. So move to the group, and I'm going to add a group right now. I'm going to call it 281291, right? Whatever you want to call it. Okay. So the first call has been moved to the group. Let me move the second call right now to the group. Bit laggy today. Okay, so I've moved it to the group, and this is the group I created, the 281291 group. So you can see my net profit is 432, which is what I mentioned just now. Okay, so I'm going to sell it together. So in other words, I'm going to sell the long call and buy the short call to close the trade at 437. You can see as the market is opening, it keeps changing. So I'm just going to sell that. create a closing order, and sell the vertical 281,291. Okay, so confirm and send in. Click monitor. All right, so you can see that right now it is not filled yet. That's the price I'm asking for, 833. That's the market price, 833. So it's right now at the market price, but there's a bit of a spread. So you have to wait a while for it to fill. So once it gets filled, then I'll lock in the profit of $430, $435, thereabouts, right? So we just wait a while for it to get filled. Should get filled in a couple of minutes. All right, there we go. So it just got filled. You can see I sold the call. All right, and the order has been filled. So I've locked in that profit right now. You can see under filled orders, it's now been filled. And there we are. SPY filled it at 833. Okay. So in case you're wondering, I have the orders on both Interactive Brokers and on Thinkorswim. So I bought this call spread on both brokers. So I've already closed the one on Interactive Brokers. So I'm just showing you how I close it on Thinkorswim. So again, you can execute your orders on any broker that you like. It's up to you. So I wanted to show you a variation of how you can use different brokers. If you like this video, do click the subscribe button for more videos. If you'd like to find out about online professional forex and stock trading courses, do visit piranhaprofits.com for international students. And for our students in Asia, we have our live stock trading and investing courses at wealthacademyglobal.com. This is Adam Khoo signing off. May the markets be with you.